Well, I think right now it really depends on what's going to happen with Greece. But so far, Kelly, as you mentioned, this is a measured response. The futures are down about where they opened up today. 1% is not a particularly large correction. To some extent, what you're seeing in Europe is really just a reversal of the optimism that people left with on Friday when they thought there'd be a deal. I think they're temporary. This doesn't mean we won't go back down and test the bottom of the range, but you think about where we are, we're still only about 2 or 3% off the recent highs. Gold, as you point out, is up a little bit, but not much. And I think what's happening, again, is a little bit of a recalibration. But the reality is, so far, people are taking a measured stance on Greece. This is obviously a monkey wrench in the situation, but it doesn't necessarily lead to a Greek exit. And even in the event that it does, there is a belief that there are tools available to Europe, particularly the European Central Bank, that will mitigate the contagion risk versus what might have happened 3 or 4 years ago.
Greece, by itself, as we said many times in the past, it's not 2011. The banks, European banks, have much less direct exposure to Greek debt than they did in 11. But my bigger concern really is around China, Mandy. When you look at the response to the 4th rate cut in the last several months, and Chinese shares closed down 3.3%, they were down as much as 7% overnight. And then you throw on top of that, you have Puerto Rico, which, again, in isolation, a big deal for the muni market. If the Fed were to go follow through with the rate hike, as Bill Dudley, the president of the New York Fed, suggested is possible over the weekend, that has ripple effects around the world. So it's not a stable world in which to raise rates. So I'd be a little careful, a little cautious around here.
But to what degree might 3 of those problems, Puerto Rico, Greece, and China, mean that the Fed rate hike for September will be completely off the table?
That would be my bet. If these continue to steamroll and get larger, then the Fed has a legitimate reason to say, okay, listen, the U.S. might look fine, but it won't necessarily look fine with all these 3 factors playing at the same time that we're trying to raise rates.
Particularly the Chinese. I think we have a good opportunity for some sideways motion, and I think we've been experiencing that for a spell. Before this selling that we're seeing today. Would also have to consider that the next main event really is going to be earnings season stateside. And hard to believe, but that's coming up next week on July 8th when Alcoa reports earnings.